Morning everybody, welcome to Stockradar, Stocks on the Move for another week. Today's date is the 25th of August 2022. My name is Richard Lee and I run the stockradar.com.au website for you. Okay, winning habits, winning ways. We're going to talk a little bit about that today. Sometimes we've got to do just what we don't want to do, but I'll talk a bit about that later on in trading tactics. I provide a quant-based strategy based on price and risk to help guide members into those good habits, which inevitably means doing what you don't want to do sometimes. And that's important. No emotional trading, we trade only by numbers and we keep to that strategy, and I'll talk to you about the importance of that today as we go through. So I'll go through the overseas markets, look at some ASX stocks, go through trading habits today and see what we can learn. Okay, so first off, I just want to talk about what we're going to do. The big danger is that at peaks or troughs, or emotionally charged extremes, you make these fearful or greedy decisions at just the wrong time. And I'm talking a little bit about recently when we saw the market take off. For the last year, it's been just trading in a really difficult phase of ups and downs and really generally going down. But the last few weeks, we've seen a few spikes in a few stocks. And that's what we want to do, and we need to be ready for that when it happens. So we've got to make sure that at these peaks and troughs we still behave the right way, rather than just saying, okay, I'm going to stop or whatever, or I'm going to get a bit reckless at the highs. So it's really important at those extremes that we do what we're supposed to do. So we need to trade the same way through both setbacks and successes. So setbacks can knock you about and you don't want to trade anymore, or successes just make you overconfident. So it's all those sort of things you've got to control, which is a bit about what I'm talking about today. Okay, let's get straight into the markets. Have a look at those today. Dow Jones at the moment, we've had a rally. We've sort of might have run out a bit of puff this week. We slowed down a little bit. It's a pretty quick little rally. We've got up to the trend line, the moving average. We're back around here. We're still trying to chip away at this resistance, but we might have a bit of trouble at the moment. We've had some good buying through here. Pressure's easing down there. It's at this stage probably a bear market rally, so we'll just have to wait and see if more gains can be made for the moment. Now the Dow Jones is the same. So I just reversed those two today just to confuse you. It's a bit the same. We sort of really come up to these lows up around here. We had a vague area around here, but I've sort of pinpointed this R1 about there at the moment, which is our recent high. We've come off there a little bit. And we may continue this trend up straight to the highs at the moment, but we just need to be a little bit wary of where we are. We've had a big nick down. We had plenty of volume on this, and we're not really seeing a great deal of substance in the rally compared to what we saw on the downside. So they're not looking that flash. Commodities, copper is in the downtrend as we've seen before, week after week, and it's really not made much advance on that weakness. Brent crude, it's come off the highs here. We had a pretty sharp drop. It's been the sharpest drop we've seen through this whole rally. We've eroded a bit of support here, so there's sort of some negatives starting to appear here. We're still holding above this trend line on this ST support here, which is down around 80, 85. So the weaknesses are the sharp drop, the support is eroding, and also momentum's now turning back to neutral, which has been pretty strong throughout most of this rally. So just some little bit of reticence there on the crude market at the moment. There's probably plenty of profits you've got in there. So that's what Brent crude looks like at the moment. And gold isn't telling us very much at all, so we're not going to spend much time on that. It's coming back down to the bottom of its trading range at the moment. No interest there. Okay, let's go to the ASX 200, which, it's had a good rally. It's sort of run out of puff a bit this week. Whether it can continue, I don't know. We're seeing the rally challenged, and it's a difficult thing. That's why I'm very much stock specific. I can stake some stocks that give me signals. This one really not giving me a signal at the moment, the ASX 200, so I'm really probably stum on this one for the moment. So, we've got momentum down there. It's eased a little bit, but really we are in that situation where we're between the high and between the low, it's stuck in the middle. Which way are we going to go? So I just go off to my specific stocks and let them tell me what they're going to do. Okay, so now what I will go to is now to the portfolio. So this week we have the stock pick update is Stockradar portfolio was over 3 new stocks in this week, good stocks. So we're up to 24 stocks at 162 and 1 ETF still. So we are now at 15% equities on the whole Stockradar portfolio of 162 stocks, still 85% cash. So we're not big on this at the moment, but the ones we are going okay. Conservative portfolio is 5 stocks out of 20. I had to rejig that a little bit as we've lost a couple of stocks recently, but I'll update you that in the newsletter this week as the changes have been made there. The Energizer is full at 5, and now the Energizer 10 is also also full at 10. So those energizer stocks are going gangbusters at the moment. And I'll give you a bit of a look at a couple of portfolios a bit later on that we have been running. They're building a portfolio we run since March and one I've been running since August. So you can see how they perform over time, over different starting dates. Okay, so that is the stock big count for the moment. That's where we're all at there. Utilities, energy still at the top there. So now we'll get into a couple of stocks. So firstly, the stocks that I've got this week, just a few of your stocks for this week. NHF, now the insurance stocks are looking a bit interesting at the moment, so you might want to go through and have a look at QBE, even AMP, which I touched on a couple of weeks ago, with some of the other diversified like Challenger is looking interesting. This also looks very interesting. We have a long-term trend here for the last 2 years, and we're now going to bang on this door at R1 if we get through that. We are neutral at the moment. We had this rally here, we got turned out here. But the market's really back to the highs. It may go through. It'll be a new high signal if it does set a new high. The trend intensity rating was -1 of last week, but we have had a very good week this week. So it's looking very interesting. And I know the market's a bit stronger today. I don't know what NHF is doing, but it's okay. We had a bit of volume jump on this spike. This is above zero anyway, so it all looks good for a break to new highs in NHF. And have a look at a couple of those other insurance stocks. Believe it or not, everybody has its turn. Okay, even insurance stocks. Okay, so Nanosonics, the one we've been following for a while. We've seen the rally. We're now getting that little pullback by the look of it. Okay, so we had a bit of a down week this week. We're down to 442 today or last night. So it may be having that pullback. So now what I'm looking for, the next step is that higher low that tells me that these buyers are keen and eager and there's some substantiation behind this turnaround that we're seeing. So until that happens, I just be patient. But if we look at this, return intensity rating is -3. It's quite good. So we've had a good rally. We're above the average. There's been a bit of volume in the buying there. We haven't seen a lot yet on the downside, and the momentum stock index is now eased back almost towards zero level. So, you know, if we do get this type of pattern there, the trend intensity will have had enough time to turn to support any move higher above there. So at this stage, if this keeps correcting back here, we're going to have a high point around here at around 490, something like that. Okay, so that's Nanosonics, one to watch, just so you can see how I work, how I look at these trend reversals, how I remain conservative, how I might remain in control of what I'm doing. Okay, so that's Nanosonics. Next one we'll look at is Brambles, which I touched on last week. We're going to have a run at this one. You know, an interesting stock. It's been in a big trading range for quite a few years now. You can see there since about 2016. Now we've had a little trend reversal here. In fact, sometimes we get a trend reversal and we don't get trend intensity confirmation. We need to wait for that to happen. So sometimes in this instance here, although I've had a trend reversal here, a low, a high point, a pullback, and then a rally through, I didn't really get a trend reversal signal because there wasn't a lot of volume there. In fact, it was a bit negative, and the momentum index was still below zero. Okay, so I didn't get a trend intensity confirmation until I got above here at around 11.20, and then we bought that, and the stock has had a very good run since then. We've come back a bit this week. R1 is really the big stumbling block. Now, if we can get through R1, that's really significant for Brambles. So that's a big forward step for about 5 or 6 years. So it's had a tough time, Brambles, but maybe it's coming back. Some nice bits of volume here pushing the stock. Momentum is very strong. The trend intensity rating is 10, so why not? Keep an eye on this one. Okay, the next one I want to look at is Telstra. The reason I'm not looking at this one is basically because it just doesn't want to go down. You know, we've had this big run up here during 2021. It's corrected back, not a big correction. We had this bit of selling here which jumped it down a bit, but since then the sellers haven't really been too active here, and in fact now the buyers are starting to push this higher. Not wildly bullish at this stage, but they are tentatively pushing the price higher, and I'm quite impressed with this support here because this is a good run here. I would normally expect a deeper correction to consolidate this move, but the buyers are seeming to hold this stock at around 380. They're happy to buy it there, and now they're going to test the upside, which they are testing, and 420 is the stop there. Trend intensity rating is -2. Still, we get a new high, it will confirm. We've got a little bit of here, more interest here. This is just getting above the zero level. Sorry, just above the zero level. So we're starting to get that turn that we'd like to see, the slow turn, the real confirmation. So Telstra is another one worth watching. So we're getting a few things that we perhaps are a little bit surprised about at the moment, but that's what the stock market does. So again, remembering things like COVID, the low there, everyone was so negative and bearish, and that's what happens at these periods. people just don't want to do stuff, and it paralyses you, and that's just really not what is good for your trading, because you've really got to see through a lot of this sort of stuff. So some of these stocks, like Telstra, if it makes a new high, I'll just jump on it and follow it, because you never know. And remember, the long-term scheme of things really is that $6.50 high, and it's even been higher than that, I think, back further. So it could still have a fairly good upside at the moment for Telstra. Okay, the next one I want to have a look at is... WHC. Now, I know it's had a bit of a drop today, but we've had a fairly strong performance by WHC. This might look like a busy chart to you, but it isn't too really. What I'm really just trying to show you here is sometimes these stocks, and they can be volatile, these energy stocks, but we've had, since the start of middle of 2021, we've had 3 trades, okay? So the 3 trades will be 23% the first, second, we got stopped out, some selling appeared here, the right thing to do, because it could have gone straight back down, we don't know. So I always protect against those ones. So we protect, because there was selling there, and it's come down below the average, hit my stop, okay? It diddled around for a while, it then went above the new high there, which gives me a new entry, a new high entry, okay? Now we had a small run up here, again 10%, but only in a few weeks, so it's actually not a bad return, 23% in a few weeks, 10% in a few weeks. Then we've now got this one, we saw this one sell off, it wasn't a huge one, we saw there's a big volume here, could have kept going down, we don't know, so we neutralised, and sure enough it turned around and went straight back up again. It happens, but if you follow it the way you're supposed to do with a process, you will get on these stocks. Now it's up 32% as of last night. I know it's come back a bit today, but this is only in a few weeks. So we've made some really good money on Whitehaven just by following this, the process. Okay, and some stocks do it, some stocks don't do it, but they're all different, so you just really need to follow that process. And I'm going to show you my portfolios later on why you would do this sort of thing. So Whitehaven Coal is still interesting to me, and again, if we look at this stock here, it's now getting quite high in the range. If we look at this top up here at around about 7.30, so we've pretty well hit that on the knocker, and we're retracing today, so that's an interesting one. So we'll be watching our stop on that one for Whitehaven Coal. But anyway, in the meantime, we've made a lot of money on it, and that has been very good. Okay, so that's Whitehaven Coal. That's it for the stocks today. I'm going to look at Medibank Private next week, which is having a bit of a run at its highs at the moment, and it's an interesting stock, so I'll promise you that one for next week. Okay, now I want to get into trading tactics. I've got a bit to cover here, so let's just go through this. Firstly, ASX stocks, winning habits. You must have the right habits to make sure that you win. So the main reason we have a trade plan is to manage a portfolio of stocks. To manage a portfolio of stocks is to guide you through those moments when you need it most. Like recently, like the bottom of COVID, like the top, all these points where we get emotionally tried, we need to control those things. So tops and bottoms are when the emotions are at their highest. Now, is this a now moment? Are we seeing a rally? We've seen a good rally in the ASX. We've seen some stocks take off, whether it be Treasury Wine Estates. There's Woodside even having a go, Whitehaven, Brambles. There's a few of them there that are all having a bit of a run at the moment. And so, is this the moment we make some money? And we'll have a look at the portfolios a bit later on to see just what has happened. So don't let fear cause you to miss out. When you get the signals, don't worry about what's going on around you. Make sure you follow your signals, and that's important. And I'm just saying this basically because I know some of my portfolio members have pulled back a bit during this process, and it's not the right thing to do. Okay? Those that follow it are the ones that do best, the winning habits. Okay, so just to explain to you again, unwanted intrusions into defined rule-based systems, which is what mine is, a quant strategy, is as dangerous as mixing two different strategies with different objectives. Okay, so if you're trying to run your emotions over a process, it's the wrong thing to do, or vice versa. But so you need to have very clear, as we know, I pedal inch, so I keep telling you, know why you buy and you'll know what to buy. So it's really important. So for those people who are letting the emotions run over this process, it is the wrong thing to do. The pull of different strategies breeds confusion and uncertainty, and you don't know where you are, and that's not the right way to do. So only by following a process will you understand where your mistakes are and things you can improve. Okay, so in the end, it's up to you to make the portfolios work. I can tell you, I can give you the signals, I can tell you what it is, but to make a system quant process work, you must follow the process rigidly, robotically. It's a choice you make, but you must follow the process to make it work. It's like stops. You set stops. The choice is, are you going to listen to your stop or are you going to ignore it? That's up to you. I know the decision you have to make, but it's up to you whether you make those decisions. So it's up to you whether you want to start kicking goals like my old friend Mr. Lloyd, who was always a great goal kicker. Okay, now winning habits, winning ways. Realistically, we all run a portfolio of stocks, not a group of single trades. So you probably have more than one trade. So you're actually running a group of stocks as a pool. Okay, so it's a team game where all stocks participate and are managed to bring about the best result. Whether it's minimising costs, whether it's extending trends, whatever it is, it's a matter of you getting most out of all those stocks to make your portfolio work. So play together, win together. These are the winning habits we need to do. Follow the process. Combine your portfolio of stocks and understand what you're doing with your stocks. Okay, so all right. Now, what I want to do is go through two stock portfolios. One was I began in August 2020, and one we began in March 2021, which I did call the building a portfolio. These I'm just going to call them two Energizer portfolios from August 20 and March 21. You must be very clear about the discipline required to run a quant portfolio. I have mentioned that quite a few times already. Okay, so what I want to do is I want to go and show you these two portfolios. Firstly, the one that I began, they're both 5-stock Energizers because the 5 stocks always perform the best. And I started this one in August 2020. These are all the trades that I've got, which you can see on the page here. Now, these are all the closing trades down here. And you can see there's been, over the last 2 years, there's been quite a few losses in here. There's been a couple of big wins, but we had a big loss here, 19%, 16% is a win, 46% is a win. But most of these losses we keep pretty small, okay, and that is really the name of the game. This has been a really hard period of the market trading, okay? So now, let's go and have a look at the open positions. If I go across to the open positions on this August 20 portfolio, you can see here that we hold Amcor, Horizon, Woodside, Whitehaven and Brambles, and you can see what they're generating at the moment. Amcor's neither here nor there at 1.7. Horizon's a bit of a loser at 10% at the moment. We've got Woodside up 8, we've got Whitehaven up 26, and we have Brambles up 10. Now, if we then go to look at the dashboard of results, so you can see I've got the 5 stocks and the 5 stocks that I'm holding at the moment. If I go across to my portfolio dashboard, it tells me I'm making 24%. Since August 20 on that portfolio, which is not bad. Okay, now over here you can see open positions 5, 19 closed trades, 24 trades. Of those 24 trades, 11 have been winners, 13 have been losses, so my win-loss ratio is 46%, but I also have a return of 24.4%. So that tells you that what I'm doing is I'm cutting my losses and running my profits, which is exactly the way it should work. So often my win-loss ratio, it's bad at the moment because it's been bad, the market's been tough for a while. It can improve a bit towards 55, 60%, it can swing down. The main thing is wherever it is, I'm minimising those losses and maximising those profits to make sure we generate a turn. It's a moving feast, and where the market goes, nobody really knows, and it's very difficult. So the recent comeback after a series of losses is a very good thing. Remembering markets don't change. It's not going to be different this time ever. We must adapt. We must have good habits. We need to know a lot of discipline and dispel your biases, information bias, anchor biases. I talk about that quite a bit. Go and look at my blog and you can find some more biases there. Okay, so fear often causes us to miss out, and we don't really want that to happen. So you've really got to make sure that you're in it, because I'm into these comeback stocks at the moment. Now if we go to the building our portfolio, which we started in March 2021, which is just over a year ago, these are all the trades that we've had so far. Now, you can see here for Mineral Resource, a 20-point win, 12% win. Not much here on the winning side. There's a few losses here, and there's kind of a couple of big ones down here. Okay, now these are trades that we've made, all trades, no problem with this portfolio. Now, if we look at our open positions now, because we've been true to our process, we now have 5 stocks all making good money in our March 21 portfolio. They are Computershare, which we have held for a long time. This is a very, very long trade since the 22nd of March 2021, and we still hold it because it has just gone up and up and up. Medibank Private, Whitehaven, Brambles and Treasury Wine Estates, and you can see the returns there that we're generating already. So already our portfolio, the 63% one on Computershare is a fantastic one. So that's what it looks like. And if we go to our dashboard now, we can see what the returns are, and this portfolio since last year is 13.8% up, which is not bad in just over 12 months. Again, you can see how 5 open positions, 5 open positions to 13 trades, 18 trades in total. So we've had 9 winning trades, 9 losing trades, 50% win-loss ratio, yet my return on that is 13.8. Again, reinforcing the fact that we cut our losses and maximise our trend. So that's really what I'm trying to talk about a little bit about today. It's a little bit about doing the right thing at the right time and making sure you follow your processes. And I know some of those people, you know who you are if you're listening. You've missed out on a few good trades, and that's really not what we want to see you do. Okay, so results review, losses, closed trades. So shit happens. So we do have losses. It's a part of trading business. You can't avoid them. And I take a few, and that's fine. But I do run my profits very, very well. So we just don't know when these things start. So this is the way markets work, and not the way you think it does. We all go to the market and we think this is how the market's going to work. It doesn't work that way. That's why we make so many mistakes, driven by fear and greed, not perspective, control, and common sense. Because we need trade plans to tell us what to do, not emotions. Okay, so that's really what I want to talk to you about today on the portfolio side, and getting those winning habits of following a process and making control, having the discipline to do all this sort of stuff. So here you can see 5 and 10 stock portfolios that I began 18 years ago, and these aren't back tested. These have been run for 18 years, and this is what's happened. So you can also see here, this goes from 2003 through to 2022. The 5 stock portfolio is up 17.5. The Energizer 10 stock's up 13.4. Now, if you look here, the GFC, if we take our chart right back to the GFC, if we go back to 2007, this looks like a huge drop. Okay? Now, this is what COVID looks like at the moment. COVID's more likely going to look like this in a few years' time. We're going to get a bit more of this sort of stuff. Markets don't change. They will have corrections, they will have bear markets, but they go up over time. And that's what the long-term trend has been for the last 100 years or more. So that's how markets work. So don't be too afraid when these things happen. You know, I look at them as opportunities. Is the market going to come down? Because I know the springback's always going to be very fast, or most of them very fast. So there you have it. There. That's what I wanted to talk to you about today. In my trading tactics. So what's happening at Stockradar now? The newsletter will be out next week. Open up with some trading tips. I reviewed the diversified financial stocks, including some of those insurance stocks I've talked about. You might want to have a look at. In Radar's Rand on the corner, okay, there's one corner of the market that I've looked at which is flying under the radar a bit, and they're starting to make a bit of ground, and I cover this whole sector in Radar's Rand, about 7 or 8 stocks. And they're actually quite interesting. Some are in my portfolio, some are outside, but it'll be really interesting reading for you. And it's exciting what's happening in the world of materials and metals, and technology demanding so many of our minerals and stuff like that, and not just the iron ore, but the other ones, the lithiums and cobalt and the nickels, things like that. So it's a really fascinating time for Australia. Let's just hope that our government can get it right. Okay. So that's all I have today. The habits you will have will determine your trading success and your future. If you have good habits free of biases, we will have them, review them on our blog, as I said. If you have good habits free of biases and emotions, your chances of success will get a huge boost. It's just a matter of doing it. As I said before, it's your choice. You can do whatever you like, but there's a right way and there's a wrong way to trade. So stay safe, watch your trends, heed your stops, and I'll see you all next week. Thanks for listening.